Hi there. This is a good REIT. NNN REIT. Quite a good one. You look at the dividend yield of about close to 6%. The market cap small, around 7.3 billion. But more importantly, why I believe this is a good REIT is here. You can see the increase in a dividend per share paid annually. For instance, from 2015, the dividend was about 42 cents. 2025, 58 cents. So in the last 10 years, the dividend yield has increased by more than 30%. More exactly, 43.9%. If they keep increasing the dividend over the next 10 years, and is likely because they can grow more in the future by 2 or 3%, then the dividend per share will be around $3.10. That means at the current stock price of $49, that means a dividend yield close to 8% at the current price. So this is quite a nice return to have a dividend yield of about close to 6% and grow more in the future to 8%. And compare this dividend yield with the current interest rates, 5% is much better than the bank, to keep your money in the bank. And this is not all. They also have plans to grow more in the future, to acquire more properties. Because if you look at their portfolio, you can see here their portfolio. Their occupancy is close to 100%, 98.5%. They have over 3,000 properties, 3,500. And more importantly, is well diversified. They have over 300 tenants, 380 tenants. And you can see here the percentages of their total assets. And their highest tenant consists of only 4.5% of their total assets. Then Mr. Car Wash and others. And you see that they don't rely only on one single tenant. And this is quite important. For instance, another important tenant is Walgreens, the pharmacy. And then here you see the distribution by county. Texas, over 500 properties. Florida, over 200. And you can see here the percentage of their portfolio. Now, bad things can happen. I don't know, natural disasters. But related to those tenants, I don't think that it's a problem. They will continue to pay the rent and increase it with the inflation. And this REIT can deliver this dividend. Now, one other question you should ask is if this dividend is sustainable. And be aware that at the beginning I insist that this is a good REIT. That means it's sustainable. And let me show you why I think that. You look here. Funds from operations for the last year 2024. $616 million. An increase from last year, 2023, from 591 million. So a good increase. And then you look at how much they paid in dividends in 2024. Here you can see, let me show you here, payments of common stock dividends. 420 million. 420 million, and they made, as you can see here, 616 million. So they pay more than about 65% of their funds from operations in dividends. By the way, if you don't know what funds from operations are, you can join my membership and I'll do a video only for you. They are core funds from operations and adjusted funds from operations. This is the most important metric to value a REIT. And I'll also show you how to calculate it. So this is quite important because if you want to value this company and you desire, a return of around 15%, you have to use these numbers and know how to calculate it. And then you find out the fair value of this REIT. Now, let's continue. Then, the next question, as I said, they are well diversified. There is no problem. They can pay the dividend. And the next question is, if they have a lot of debt. because sometimes the debt may be a problem. If you look at their income statement, here you can see interest expense, around $184 million. As they make over 600, they can cover this interest quite well. Now, you also have to look at their debt on their balance sheet. Here, you see their value of their portfolio of about 8.7 billion, an increase from 8.5 billion last year, 2023. So this is good. Some cash, 8 million, but this is not too high. And then you look at their debt, which is about 6.3 billion. Now, as you've seen, they made per year over 600 million. And they have the debt about 4.3 billion. As this is a REIT, they have a stable income, that rent, they can cover this debt. There is no problem. Now, another important thing about this company you have to know is their growth rate. How much they can grow in the future. And how they grow, because this is also important. For instance, if you look at their strategy, you see here, property acquisitions. 2024, they use 565 million to buy other properties, to grow their portfolio. And this is good, quite good. But they not only buy more properties to increase the number of tenants, they also sell unprofitable properties. You can see here. They use 565 million to buy more real estate, but they also sold 148 million worth of real estate. And this is a good strategy. Because if you grow only for the sake of growing and you don't care on how much money you take from your investments, then in the long term, this dividend won't be sustainable. They won't make a lot of profits. And you can see that the growth rate for 2024 was 2.5% for funds from operations, and adjusted funds from operations 2.8%. And this is a good growth rate, especially if they can expand more. And they said that they fund the acquisitions through borrowing. They have a credit facility by issuing debt or equity securities in the capital markets. Also, they use the funds from operations, what's left after they pay the dividend, and the sale of their properties. So, if they can find cheaper properties, real estate properties, they have capital, they have ways to raise capital to buy those cheap properties, especially if we have a downturn, a recession. They will find cheaper properties to invest in, and over the long term, they will collect that rent. Because you will have a decline in the price of real estate. They buy it at that moment, if they do the right thing, of course. And then you have a rebound in the price of real estate and also the rent. And over the long term, the growth rate can be higher than 2.5% or 2.8%. And this is quite important. Now, you also see that the number of shares for NNN REIT has increased over the years, but not that much. From 2015, of around 144 million to 184 million. But at the same time, they also increased the dividend from 2015 to 2024. So they are able to generate more profits, even if they issue more shares. And it's quite good because, as you've seen, funds from operations over 600 million and 400 million only in dividends. And the rest of money they use for acquisitions, to invest back in the business and grow more in the future. As they have this portfolio of 3,000 properties, they might double in the next 10 years. Especially, as I said, if you have a downturn in the prices of real estate. That will be the greatest opportunity for this company to increase their properties because they find cheap real estate. And over the long term, their return will be higher. This growth rate can get higher. And as they have more tenants, they are well diversified. Even if they have a downturn, there is a recession, maybe they lose some tenants, but still they will be able to generate some profits, funds from operations. you have a decline in the short term, but in the long term, a rebound. Now, if you do decide to invest in this company, it also depends on the return you want. If you are pleased with 6% and grow more in the future, depending on the growth rate, or if you want more. Now, if you put a gun to my head and ask me what price would I pay for this stock, this REIT, NNN stock, then this question is available for members. If you want to know the answer, you can join my membership. And to do that, you go to my profile, press join, scroll down, and see all the levels. And you choose what you want. So that's it for this video. And if you have other questions about this REIT, or other questions how to analyze a REIT, how to understand funds from operations, then let me know in the comments.